All right, so good morning, everyone. Welcome to today's class. We are going to talk about the tools and the education and the processes to becoming a successful trader or investor at Stockscores.com. And I will be talking for about 45 minutes to an hour, and we'll go through any questions that you have as well for those that are attending live. For those that are watching this as a video, you can always email me questions. I'll put my email address at the end of the video. So what are we trying to do today? Well, my goal is to show you how you can trade more effectively. And the chart we have on screen right now is a day trade chart. This is a stock that we traded last week. And I just want to give you a sense of what I do as a trader. So I essentially follow indicators which I've created, and I look for buy signals using these pink and yellow dots, and I look for sell signals using patterns and different methods. Sorry, I just have to pause for a second. I screwed something up with this drawing tool that I have. I did this last time too. Okay, so we have these pink and yellow dots right here, and we have sell signals. You're going to learn in the courses that I do that we use these things called risk reward lines, and risk reward lines are the reason that we sell stocks. So in this case, this ME 23andMe Holdings last week moved up 75% in about 30 minutes, and that's the kind of trades we love. These stocks tell us that they have good potential early in their trend, and that's what those indicators are for. So that's day trading. Some of you may be more interested in swing trading. Perhaps you can't devote as much time to the market as a day trader would. And so in that case, if you can sort of monitor the market in the opening hour, which is when most swing trade candidates come up, and then maybe monitor your holdings through a cell phone or your computer or something through the day, but you don't have to monitor them that closely, taking a look every 10 or 15 minutes perhaps, then you can swing trade. And so here we have an example of a swing trade signal there. You'll notice the same pink and yellow dot, and that's the stock rallied 67% up to the sell point there in 5 days. And then, of course, some of you may be more interested in managing your retirement portfolio, where you're looking to just buy and sell 10, 20 stocks a year, and just trying to beat the market. And we do that trying to find stocks like this. So my picks last year, I think, earned about 41%. And this was one of them. This is one that's still open. Right here was the buy point. You can see again the magic little pink and yellow dot, which is our action candle. And the stock has continued to go up. I still think this is a hold. I would not buy the stock now, but if you're in it, it remains a hold. So in order to do these things, to capture good trades, requires three things: knowledge, tools, and support. And I'm going to go through each of those things today, how I can give you the knowledge, how I can provide you with the tools, and how I can support you as you go through the learning process. So what we will do in this webinar, I'm going to show you how I can give you the knowledge, as I spoke about, and then I'll showcase the tools. I'm going to show you my market scan tool. I'm going to show you my active live tool, and then I'm going to just walk you through the process. So if you say, okay, I want to learn Tyler's strategies and learn his approach, what is the process to getting there? And how much time does it take? And, what is the cost of doing so? All of those things. What kind of support will you get? I'll walk through all of those things. So let's talk about investing first. So I have two products, Stockscores Investor and Stockscores Active Trader. We're going to talk about the investor course first, the investor membership first, and that is what I call position trading. Position trading is holding a stock for anywhere from 2 weeks to usually 2 or 3 months, sometimes longer. Sometimes we'll have a trade open just because it's working so well. It could be 6 months, but it's not buy and hold, forget about it investing. I don't believe in that. Even the best stocks like NVIDIA, for example, it had a great run for a year and a half, 2 years. And then over the last 6 months, it really hasn't been a great stock. And so I like to move in and out so that my money is always working for me. And when a stock loses its momentum, no problem. We can sell it and go on to something else. And we can always come back to that as well. Stocks like Tesla have had big runs for a few months, and then they can have a big down period as well. I don't want to be there for the down period. So I teach you not only how to know when to buy, but also how to know when to sell. Our goal is to beat the market, but our number one goal is to protect our capital. And when we talk about the investing strategies, which I will go through later, they really take less time commitment than active trading. If you want to be an investor with my approach, you have two sort of scenarios. One, you can do it daily, 15 minutes a day. When you start out, probably more like half an hour a day because you're going to be a little slower doing the work. But then it gets to the point where you can even do it faster than that. I do my market scans for my position trading in 5 or 6 minutes, but I also have lots of practice. So I always say to people, 15 minutes a day. But if you don't want to do it daily, and if you don't want to be even that active, then you could be very sort of passive and do it just on weekends, 15 minutes a weekend to evaluate the market, look for opportunities, and manage your portfolio. And the goal there is to beat the market. You know, the market's return over the last 10 years has been about 10% a year. I'm rounding off, and that means that your capital invested in an index fund would double in about 7 years. But if you can increase that annual return from 10% to 15%, 20%, then you can double your money much more quickly. And my goal is to always beat the market. If the market earns 6%, I want to earn 12. If the market earns 15% because it had a good year, well, I want to try to earn 30. And as I said, my position trading picks last year, I think they're 41%. I'll have to check that, but it's right around that, somewhere around 40%. Does that mean it'll be 40% next year? No, there's no guarantees anywhere, but I've done this for a long time, and my approach has been working for 25 years, 30 years, and I don't see a reason why it'll stop working. And my goal here today is to show you what that approach is. So we're going to utilize tools that identify quality opportunities in less time. So I built a tool called a market scan, which I'll show you soon. And it allows me to search through the market looking for stocks that meet my criteria. But it's more than that, because investing, trading the market isn't just about when to buy the right stock. It's also about managing risk effectively, controlling emotions effectively. If you put all your eggs in one basket and that basket turns out to be a bad stock, you can lose everything. And so we always manage our risk, and that's a huge part of how you succeed in the market. So again, this is a typical example of a position trade. I found this using the Stockscores market scan on this day. I also found it on this day. If you read my weekly newsletters on Stockscores, which are free, and you should make sure you're registered at Stockscores for that free weekly newsletter. I mentioned it here in the weekly newsletter, and then I picked it here as well. And this is when it actually made an action candle. You can see the pink and yellow dot there. And as I said, that's up about 170% since then. When you buy that stock, okay, the buy point is here, and then you plan to lose if it goes through that floor. If it had gone through that floor, you get out and you call it a loss, and that happens 30, sometimes 40% of the time. But when they win, if you can earn a multiple of your risk to the upside, then that essentially pays for multiple losers. So this stock right now is up roughly 5 times risk, which means it basically pays for 5 losers. So if you think just about the economics of that, if you lose 3 times out of 10, but your average winner is double your average loss, and you do that 20 times, that's how you make good money in the market. And I am never going to be right all the time. No one is ever going to be right all the time in the market. And so that's why you have to plan for the loss. You have to have a disciplined approach that says, every once in a while, I'm going to have a dud, and I'm going to get out of it with a small loss and not let that small loss grow into a big loss. We've probably all got those stocks in our portfolio that we wish we had sold a long time ago. And one of the reasons we don't sell those is because it's painful. And we don't take that big picture approach. We bought a stock, it goes down, we think, oh, I'll just stick with it. It's a good company, it'll turn around. And soon that loss doubles in size and then triples in size, and so on and so forth. And eventually you're a long-term investor in a lousy stock. We don't want that to ever happen. So we have to have a plan for when to sell a loser. And it's not as simple as saying, if the stock I buy goes down 10%, I'm going to sell it. That's actually a foolish way to manage risk. Instead, what we have to do is look at the message of the market. Look at where the market has established lower boundaries, lower floors of valuation, and say, if it goes through this floor, that has meaning. If we return to this chart, this stock for a few weeks here the market said, we don't think this company's worth less than $3. And then some new information came into the market that people said, well, we're now willing to pay more for this stock because something new has happened and it justifies paying a higher price. Well, if this information that justified paying a higher price there was true, then you would expect the stock to continue to go up as more and more people, buy into the story. But if that news was bad, you would expect it to fall through that floor. So, I teach you about where these floors are and how to define them and using indicators to define them. But it's all based on ultimately the fundamental analysis of the stock. Just instead of doing the fundamental analysis, we are following the people that are doing that work and learning to read the message of the market. And that's what I do when I look at these charts. You'll notice that my charts really don't have any indicators. We have volume, we have price. The only indicators are my own indicators, which is this little pink and yellow dot. And on some charts, you'll see some other ones, and then these little lines that are drawn here. And then the only other one is these little plus signs that are red and green. And those are all my own concoction. And they have simple, theoretical reasons for why they work. And that's what I can teach you. So what is the process if you want to manage your own portfolio, manage your own retirement, sort of take charge and as an investor? Well, you have to begin by understanding the base theory. So we talked about that in our first lesson this past week on Tuesday, this idea that, there's all these people voting in the market about what a company is worth. That's essentially what you do. When you buy a stock in the market, you're essentially casting your vote that you think that stock is worth more. Well, why do you think that? Well, you have some information that gives you that belief, right? And on the other side of that trade, when you buy, there's someone else selling that stock. And they're selling because they think the stock is worth less or more likely to go lower. And so you've got this battle going on between buyers and sellers. The buyers think the stock is worth more. The sellers think the stock is worth less. And ultimately, one of them is wrong. Now, yes, there's always different motivations. Sometimes people sell a stock because they need the money to buy a new car, whatever. But generally speaking, that's what's driving the market. And the thing that feeds into that is information. And what I tried to teach on Tuesday's lesson was that the stock market isn't fair. Most retail investors are using publicly available information. They may be reading the newspaper, they may be watching CNBC or Bloomberg, and they are taking information that is widely known. Well, if information is widely known, then it's already priced in because lots of people know it and they're going to go in and vote on that information by buying or selling. So what moves markets, what moves stocks is always going to be information, but it's not the information that's widely known. It's the information that most people do not yet know. And it's only a small group of people because they have better access to information, because they have more expertise in that particular company or that particular market sector. Those people have an advantage. Now, you can be part of that group if you're an expert in biotech because you are an oncologist or a researcher, a biologist. You probably have some more expertise in that particular area. You'll have people that have a lot of expertise in the oil and gas industry. I come from a province in Canada, Calgary was where I grew up. Lots of people there know lots about oil and gas. So they are very good at predicting where these oil and gas stocks go. But you can only be an expert on one sort of area. You can't really be an expert on everything. But the market is an expert on everything. When you see a stock, every single stock has a small group of investors that know more about that company than the rest of us. And they act in the market and they leave a trail for us to follow. And I've developed a methodology that looks for the abnormal trading activity that comes when someone that has better information is acting in the market. All right, so that's kind of the base theory. I've then built strategies around that, and I'm going to show you how you learn those strategies in a moment. Once you've gone through the strategies, let's say you wanted to do the investor membership at Stockscores, you're going to spend 5 or 6 hours going through the base theory lessons. And then you're going to pick 1 or 2 of those strategies, and that's another 30 minutes each strategy. But you still need to practice. It's like reading a book on how to ski. Okay, you go to the ski hill, you're still going to fall, right? So you have to practice. And with each bit of practice, you're going to get a little better. Reading charts to me is easier than skiing, but it still takes practice. And because it takes practice and because there's some uncertainty, particularly when you start, what is so important is to have support from someone who has that experience. So I've traded, well, almost 35 years now. I've been teaching for 25 years. I have seen every mistake. I've made every mistake. And I'm good at, if you tell me some of the stocks you own and I look at those, I can usually see a lot of the problems that you may have as an investor. And not that they're problems that you should be ashamed of, because you're probably just a normal human being. But normal people have a tendency to hang on to their losers and sell their winners too early. And so my job is to support you through the learning process so that you can pick the right stocks at the right time, manage risk effectively, and sell them at the right time as well. Now, once you have your practice, you're going to actually start scanning the market for opportunities, and we'll look at the market scan in a moment. And when you do the market scan, if you run a scan, let's say it reveals 40 stocks. Of the 40 that it reveals, probably only one or two are worth considering. I do scans every day. I say no a lot, and I have to teach you how to say no, because there's 10,000 stocks trading in North America, and if I run a scan, I can go from 10,000 down to 30, but then we need to have some rules to go from 30 down to 2. And so that's what we're going to practice next week for those that choose to become an investor member of Stockscores, is you're going to learn, and then we're going to practice together, and I'm going to show you how to be fussy. And almost everyone, when they start out, is not fussy enough. And so the support from me is to make you fussy enough. So then you identify a trade. Let's say you find a stock that meets all the rules and it looks pretty good. The next step is to do risk management. You don't just go blindly in and buy what you think you can afford to buy. And this is a common mistake. Someone will say, well, I have $5,000 of cash in my retirement account. I've got the rest of my capital is in stocks. So I've got $5,000. I'm going to buy $5,000 of this stock that I just found. But they don't really think about the risk. And if you don't tolerate a loss of more than $200 on a trade, and you just arbitrarily buy $5,000 of a stock because that's what you have for cash, well, you may actually be taking $1,000 of risk on that trade. When you think about where you're buying and where the stop loss point should be, that could reflect a $1,000 loss if that stock is quite volatile. So we adjust our position sizes for every stock based on the volatility of the stock. What that means is that if you were to buy a stock like Microsoft, which is not very volatile, versus a biotech company that trades for 60 cents a share, well, you might buy $5,000 of Microsoft, but only $500 of the biotech stock, because they have different amounts of volatility. So therefore, the risk of the biotech stock is going to be much more in percentage terms. That's why we buy a lot less of that. And this is a big part of what I teach. Ultimately, we want to make every stock have the same amount of risk in dollar terms. And you do that by just buying less of the volatile stock and buying more of the less volatile stock. And if you have less capital, then you don't really buy low volatility stocks. You tend to focus more on more volatile, low price stocks, because you just get more bang for your buck out of them. And then, of course, we want to talk about exits. It's not enough to know when to buy and how much to buy, but we have to also know when to sell. Now, let's talk about the active trader membership of Stockscores. So this is for day and swing traders. You can do this full-time or part-time. Most of my students tend to be more part-time. They don't sit in front of their screen all day. There's different phases of the day. You can trade the pre-market, which is from 7 o'clock Eastern time until 9:30 is a good time to trade the pre-market. You can trade the opening hour, which is great. You can trade the middle of the day, which tends to be a bit slower, but I think a little more reliable. You can trade the final hour. You can trade the after hours. The market continues to trade from 4:30 Eastern time until 8 o'clock Eastern time, and 4 o'clock Eastern time until 8 o'clock Eastern time. So that's another 4 hours that there's trading, and not a lot to trade, but just about every day there's 1 to 3 stocks that meet our rules, and some of them make big moves. We had some this week that moved 100% after the market closed, and they did so on strong liquidity. So someone might say, well, I don't have the time or the desire to sit in front of my screen for 9 hours a day. And I'm going to tell you, I don't either. I've been doing this for 35 years, sitting in a chair in front of screens. It's not easy on your body to sit that much. So I tend to only trade 3 hours a day, maybe 2 or 3 hours a day. But I focus on certain times of the day that work for me and where there's good opportunity. And you can do the same. Some days I sit there longer if I have the desire. If it's a busy day, I might. But you work as much as you want to. And that's one of the great things about short-term trading. So the idea behind active trading is you can turn your capital over more often. You're putting in more time, and you might buy and sell a stock within an hour and then take that capital and put it into something else for a trade that lasts 20 minutes, and then take that capital out and move it into another stock where you're in there for 2 hours. And so the benefit of that is you're turning your capital over more often, and you just can pull more money out of it. Now that's a double-edged sword. If you're a good trader, you can really enjoy a very big market return doing that. But if you're undisciplined, if you're emotional, it can also be something that causes you a lot of losses. And so it's very, very important to have good strategy, good risk management to practice. In one of the presentations, I think it was our Thursday presentation, I talked about the importance of being consistent and about how you can really have great returns in the market if you are disciplined and focused and consistent. And if you're not, the stock market can really beat you up. And again, the reason I don't like to teach a lot of people every year is because I like to give people that support to get them through the hard part. The hard part isn't understanding the rules of when to buy or when to sell. The hard part is having the emotional control to do what I teach. And if you're a normal person, that is difficult because normal people have an emotional attachment to money, and it causes them to not do what they know they should do, which is take the small loss, which is not buy the stock that's been going up, sharply for the last 2 hours because they have the fear of missing out. These are normal human responses that we all do when we start, and you have to train out of you by using mechanical approaches that try to take the emotion out of the trading decisions. All right, so I have developed well-tested strategies over the last 35 years. I'm always refining those strategies, trying to make them better. We're always adapting to the market we have. In the last little while, say the last 6 months, I never used to trade the pre-market at all. But in the last 6 months, I started doing that because there has been good opportunities in that trading session that starts before the normal market opens. I never traded the aftermarket, but now there's good opportunities there. So we just go where the action is. And there's always action somewhere. So again, for a day trader, we might be, looking to buy here. This was at 9:40 roughly, and the sell point there at around 10 o'clock. So that's a 20-minute hold on a stock that made a pretty substantial move. The swing trader is going to be a little more patient. Most swing trades show themselves in the opening hour. So we might buy here, and you have a sell signal there. You don't understand necessarily at this point the reason for the sell, but we have these lines that we draw that are based on volatility. And so we can use that to our advantage for exits. So the process, if you want to be an active trader on Stockscores, is again, understand the base theory. So we've got 10 lessons or so. I'll show you those in a moment. And then from that base theory, you're going to focus in on some strategies. I teach, I think, 7 short-term strategies. You shouldn't do more than 1 or 2 at any one time. And so you pick the 1 or 2 that you want. I can help you pick those. If you tell me sort of your time schedule, how much time you want to put into the market, I can say, okay, well, for you, if you're trading the opening hour, let's say, and you can only do the opening hour, maybe do the Alpha Echo strategy. If you can trade for 3 hours a day, but more so in the morning before you go to work, trade the early riser strategy. So once I have some information from you, I can help you with that. I've built tools to do this. I don't like to use what other people use. So I created my own indicators, and we can apply those in a program called TradeStation. I have no affiliation with TradeStation. I just subscribe to it. As a Canadian, I cannot have a brokerage account with TradeStation, but I can subscribe to the platform. If you are other places in the world, you might be able to have a brokerage account. I have to pay $79 a month for TradeStation, but if you were in the US, you could have a brokerage account with them and you would get it for free. But we also have a tool called Active Live, which is much more automated and will do a lot of the work for you. And it's really valuable, especially when you're learning because you don't have to do all the work that the computer is doing for me. I've set up all these automated processes that, run a scan, grab the results of the scan, move it to another place on the screen, calculate for action candles, and then I only have to look at the action candles that appear. Say in a 2-minute interval, we might have 3 to look at. So I'll quickly go through those 3. I don't like any of them. Okay, wait for the next 2-minute interval. Now I got 4 to look at. I go through the 4. Oh, I like this one. And then I execute that trade on that one. So that's the process through the trading day. That's for swing trading. Most of the swing trades show themselves in the opening hour. For day trading, as I said, it can be all day if you want. You could trade 12 hours a day if you wanted, but I don't recommend it. For most of us, a few hours a day is what we do for day trading. I like to take my day trades in the morning, and maybe I'll have a really strong one that's running all day. I might, take my iPad with me to a coffee shop and monitor that one trade that I have open for exit signals. I don't have to sit there all day to do that. And as I said, a big part of what I teach with the Active Trader program is giving you that support. I'm coaching every day in Active Live. I don't really tell people what to buy and sell. I do give a few examples every day in real time of things that I think are worth considering, and I give them scores out of 10. So to me, anything above a 6.5 or better is worth buying. So sometimes I'll say, okay, well, here's MLGO. It's doing an early riser right now, but I'm worried about this resistance from the pre-market, so I'm going to give this a 6. Or I might say, oh, this one looks really great. This is a 6.5. And those numbers essentially are the probability. So if I give something a 6, I think it has a 60% chance of working. If I give it a 6.5, 65% chance of working. So Active Live is something I created a few years ago because I just found people really needed that extra support with day trading. Intellectually, day trading, swing trading, position trading, intellectually it's all the same. It's not complicated. But what happens with day trading is you have to make your decisions quicker. If you're making a position trade decision, you can run a market scan, look at the chart for 20 minutes if you want, and then execute that trade the next day. You've got all the time in the world to, determine whether it is a good one to buy or not. When you're day trading, you got to make those decisions fast. And so that time pressure sometimes gets people emotional. And so by having me coach through Active Live, I can really help you with the process, help you with being quick, help you with learning how to evaluate a stock in real time as it's happening so that you can get good at it. It's not going to happen in one day. You have to practice. And you should realize that the first week when people come on Active Live, they're lost. Almost everyone is a little bit lost. And I tell people up front, you're going to be a little overwhelmed at first. But after the first month, it's like, okay, I understand this. This isn't that complicated at all. I just have to know where to focus my attention based on the strategy that I'm doing. So this Active Live service that we offer, it's real time. It's a live webinar that runs all day. I talk for the opening half an hour and the last half an hour. And then 4 to 6 times a month, I do an extra hour of coaching. And again, I'm trying to just teach you the process to know when to buy, when to sell, evaluating things in real time. The computers are doing most of the work. They're running these automated processes to find the stocks that meet our criteria. And then, again, if there's 5 to look at, you got to evaluate those 5 and say, one of these is actually good. At the end of every day, I do a sort of question period where you can submit your trades in the questions, and I will walk through those trades and say, yep, you did everything perfectly, or you kind of screwed up one thing here, and here's why you should not do this, and we can fix that. It's a learning tool. It's the best learning tool I think that I offer for day trading. It's $245 a month. You get the first month for free. You can apply your first free month whenever you want. If you take the course now, but you're not going to be able to trade live until, June, no problem. You can do your live free month in June. We're super flexible on that. This is what the Active Trader screen looks like. And as I was saying earlier in the presentation, there's a lot of information on here, and you're not going to do everything. So let's say you're a swing trader. Well, you're going to primarily focus on this box. And that's all you're going to focus on. The rest of it is not worth your energy. If you are applying the day trader strategy, which is mostly to buy stocks in the first hour, then you are going to look at this box. if you're going to apply the early riser, the IPBs, you're mostly going to look at this box. And for the IPBs, this box. We always like to watch this one because these are the stocks that have the best potential. These are low float stocks that are really in play. And so, if you think about the examples that I've shown in the presentations this week, it was MLGO. You can see them here. There's ME right here, MLGO, and VVPR was a great one this week. ASST was okay. LAZR okay. PST was a big mover last week. So these are the stocks that are in play. And they're usually stocks that are destined to go they're destined to go up and then down very quickly. And sometimes they'll go up for 3 days and they'll go right back down again. I don't really care if they go up and down very quickly because I'm going to be in and out before that ever happens. We're just taking advantage of the volatility. There's this crowd that chases after stocks, and they'll chase a stock for a day and the stock will go from $1 to $5. And then the next day, the crowd has moved on to something else and that stock starts moving down from 5 to 4 to 3 to 2 to 1, which is why we have to have good risk management. We have to be out before the reality check comes. These are, pump and dumps, and some of them are just news releases that drive the action, but then the crowd is fickle and it moves on to something else. If you're going to be a day trader, we're not getting married to these stories. We're not believing in what these companies tell us. In fact, I really suggest you do not read news releases when you're trading these companies because it gets you emotionally attached to the company. Just trade the market action. Some of these stocks will trade millions and millions of shares a day. You can be in and out quickly and easily and just take your money and run and move on to the next one. So anyway, that's a big part of what we do here. On this screen, you also have a market chart because we sort of evaluate whether we should be getting aggressive on the buys or aggressive on the sells based on what the market's doing. We have this list here called alpha gainers, which are stocks that are statistically significant volume traders with good liquidity. So anyway, there's all these different screens here. I set up a watch list for you in the opening half an hour. So those are the stocks that are most likely going to be the best ones to watch. And I build that for you every day in that opening half an hour. So again, we're trying to find stocks like this. You saw that ME was on the list, and there was the buy, and there was the sell, and there was other trades. This is actually, I've oversimplified this because some of the best trades were actually in here, where we were trading on a very short-term time frame. But for the purpose of this lesson today, I didn't want to get too complex. So that's how that stock traded. CRVO, this is a swing trade, moves over the course of 4 or 5 days, and that would be a typical swing trade. There was actually another buy signal right here as well. This is called an alpha echo. So you have this red line here that's drawn. You have a pink and yellow dot breaking the red line from a rising bottom. That was a pretty good setup. And that particular trade probably earned 1, 2, 3, 4, like 5, 6 times risk. All right. So all of these things make more sense when you've gone through the course material. So what do you need for success? Well, as I've talked about, you need knowledge, you need tools, you need support. So I'm going to show you the Education Center now. I'm going to show you the tools now. And then I'm going to talk a little bit about how I support you. What you have to bring, and this is a big bring, and that is you have to have some capital, obviously. You can start practicing without capital. Of course, you can paper trade while you're learning, but ultimately you're going to need some capital. And how much do you need? I always say people start out slow. $5,000 is great. If you have $5 million, I want you to start with $5,000. You are going to make mistakes when you start. And so you need to have those mistakes cost you $50, not $5,000. And so as I talked about in the presentations earlier in the week, we really try to have a process of building confidence and experience without risking a lot of money. So you start paper trading. That doesn't cost you anything but your time. And then when you're successful paper trading, now you start with a small amount of capital. You can start with $3,000 of capital. That's what I started with. And you're only going to risk $25, $30 a trade. And then you're going to move it up a little bit and $50 a trade. And then you're going to move up your risk tolerance to $100 a trade as you gain success. And if you can be consistent at $50 a trade, and you can then make that happen at $500 of risk and then $1,000 of risk, all of a sudden you can start making some really impressive money in the market. But I've taught a lot of people over the years, and I'll tell you that the greatest challenge that people have is the emotional part. And by starting slow, building confidence, gathering experience, for your first month, really not trying to make money, but just trying to learn, you will be that much better. All right, so let's show the Education Center now. And I showed this a little bit in the other presentations during the week, but I just want to give you another little tour of it. So if I go to the Trader Training menu, and because I'm logged in, I have access to the Education Center. So this is a member-only tool. Now there is an area of this tool that is free, and that's this Getting Started area. If you just want to learn some real basic things like how the stock scores work or how our charts work, there's little video lessons on that. But the important stuff is in the sections below. So the foundation is what teaches you the core theory, I guess. So in our first lesson on Tuesday, I talked about the 6 elements of chart patterns, which were support, resistance, optimism, pessimism, price volatility, and abnormal activity. And you can see all of those listed there. And so that's what this lesson is all about. And I teach first, like we talked about on Tuesday, inflection points, and then I go into all of those 6. So we kind of covered that on Tuesday as a group. Now, you can read the lesson. Some people would rather watch a video, so there's a video. And it's taught by me. This one is about 30 minutes long. You can watch it on your phone. You can watch it on an iPad, on your computer, doesn't matter. There's also a little quiz. So after you've gone through the material, if you want to test yourself to make sure you understood it, there's a little quiz there. And there's an assignment. So again, if you want to make sure you understand what inflection points are, here's the first question: identify the inflection points on the chart. So you would say, okay, there's one here, there's one here, there's one here. How do you know that? Well, that's what you've learned in the lesson. All right, so that is the foundation area of the Education Center. And that's going to give you your theoretical base to then apply the strategies. So if you are an investor student or member, and you want to look for stocks to hold for the next few weeks, months, you might apply the abnormal break strategy. This is my current sort of favorite for position trading. So again, there's a lesson. It explains what we're looking for. So here's an example. We kind of talked about this through the week. You got this low volatility here, and then you've got this burst of abnormal activity there. And you can see the stock went up, and eventually the upward trend line was broken. So there was a sell point there. These are all the things that you would learn in that lesson. And of course, there's a video explaining it as well. Now, there's no test or there's no multiple choice quiz for the strategies, because really your test is to apply them in the market, doing your market scans and practicing that way. Now, if you want to do the active trader strategies, well, there they are. Within the active trader section, there's actually a little more. We have how to use TradeStation. There's actually 2 videos on how to use TradeStation. There's an exit strategy video, and then there's a number for different strategies. Shortening the day trading time frame, that's a new lesson that I put up, because lately what's been working really well is trading the really liquid abnormal stocks on a very short time frame, like a 10-second time frame. And I found some good success with that over the last couple of months. So just added a lesson. I'm always trying to give whatever's working best to my members. All right, so that's the Education Center. Now, the next part of the tool that we're going to look at is the Market Scan. So here you can see we have got different tools. Market Scan is primarily for investors. Active Live and TradeStation are primarily for day and swing traders. You can do some swing trading with the Market Scan as well, but let's just look at how that works. So there are preset scans, and these scans correspond to the strategies in the Education Center. So the Stockscores Simple US is the Stockscores Simple strategy. And if I just jump back to the Trader Training, to the Education Center, and go down to the Investor section, here you see Stockscores Simple Daily Strategy right there, right? Okay, so we're going to go back to the Market Scan, and we're going to select Stockscores Simple. Now you'll notice I've got a US version and a Canada version. The only difference between the two is the liquidity requirement. Because the Canadian market isn't as liquid as the US market, we just have some little different tweaks to the strategy. So I can select Stockscores Simple US, and I can run the scan. It went through every stock that trades in the US market, and it found 64. So there's roughly 7,000 stocks listed in the US market. And in the blink of an eye, you saw how quick it was. It scanned through all 7,000, and it picked the 64 that have good stock scores and some other rules. The other rules were part of the scan. Now I can then view these charts, When you start out, you're probably going to view in a large chart view, which we call a slideshow. So I click on slideshow and I click on go, and now I can look at these charts. Okay, so the first one I see is this stock is in a bit of a downward trend, had some optimism building in the last 2 months, and broke higher on Friday with some decent volume on Thursday. You can see the big volume on Thursday and a little bit on Friday. So it looks pretty good. I'm a little worried about resistance here. I always look at charts in multiple time frames. So in this case, the daily chart is interesting, but I'm not convinced yet. So I'm now going to look at a 3-year chart on the weekly time frame, and I see that this stock is really moving up into a lot of pessimism. It's going to find resistance here. If I'm entering here and support is there, I barely have 2 times reward potential for the risk. Now I know I just said a lot right there, but remember I'm doing a video of this as well, so you can go back and replay that if I'm going too quickly. All right, so I would say that this is not good enough. I would give this a 5.5 out of 10. Stocks that move up into pessimism usually have a hard time making gains. You see here that this stock had a 2-week little run higher, and then it hit this resistance level and it got stuck and went lower. I think that's what's going to happen again. I think it come up into here maybe and then roll over and start to fall apart. So it's good, but it's not good enough. So I go to the next one. All right, this stock, yeah, it was pretty good on Thursday. That's when it had this low volatility, right? We talked about that on Tuesday. We also talked on Tuesday about the abnormal price break, which happened on Thursday. You can see the abnormal volume. So if you were doing this scan on Thursday, that would be one that would have come up and you would have said, yeah, it looks pretty good. Now, again, we always look at the longer term time frame for confirmation. And there I can see a little bit of an issue because there's some long-term resistance here at $4, but it's got enough reward for risk potential on Thursday to make that okay. Now, why do I say that? I'll give you a little clue on how that works. So let's go back to the daily chart. So if the resistance is at $4, it's $4 is up here, right? So if I'm buying at 2 and my stop is at $1.20, my risk is 80 cents a share. I need at least 2 times that upside. So 2 times 80 cents is $1.60. $2 plus $1.60 is $3.60. And I said resistance was at 4. So that means that there's enough upside to justify the risk. It's not outstanding. This is one where I'd give it a 6, 6.5, somewhere in there. Okay, so that's the process. Now, when you start, you're going to go through this slowly because you're learning, and you might spend 30 seconds on each chart thinking about what Tyler said in the course material. But as you get better, you start going through these quicker, and I'm going through these pretty quickly because I know that this one, for example, is way too late. The breakout was back here, and then the break of our first pullback was there. This is good, this is good, this is bad. Why is this bad? Because price has run so far above the trend line that it's likely to correct back to the trend line. These are all concepts that you will learn in the material, all right? Today, it's going to seem a little overwhelming, a little complicated, but just give it a little bit of time and effort and you'll learn all these things. Now, once you get good at this and you don't need to go through them so slowly, then you can do the charts in a gallery view. If I click on gallery, I can now scroll through these 10 at a time. And, because I practice, I can go through these really quick and I can see that none of these recent ones are good. So I go to the next page. And this is how you can do your market scanning, routine in 5 minutes. You're not going to do it in 5 minutes when you start out. You can see I'm going through these really fast because I know what to look for. When you start out, you're going to go through them slower. And then after 2 weeks, you're going to be a little faster. And after a month, you're going to be quite a bit faster. Here's one that's got good potential. This stock is making a pattern called an ascending triangle. It's got compressing volatility. All it has to do now is break out, right? So it's not good enough yet, but if it broke out on Monday, I might consider that. It's got a good yield too, paying a 6.3% yield. So that's interesting. So anyway, that's the process for using the market scan. Now, as I said, we use the market scan for primarily position trading. We have some swing trading scans as well. But when I'm day trading, I'm more inclined to use TradeStation and the Active Live service, where we have the algorithms going through the entire US stock market looking for abnormal stocks. Now, I said the entire US stock market. We don't really day trade the Canadian market. You can swing trade the Canadian market, but the Canadian market doesn't tend to be liquid enough to really day trade. So even though I'm a Canadian, I trade the US market. There's no tax problems with doing that. You can trade the US market, no problem. again, the reason we do that is just more action, more liquidity. You can move in and out quicker. You can take bigger positions on the US market because of that. All right. So as you go through, that was the market scan tool. Now I just want to show you, we've kind of shown the charting tools. I'm going to show you another tool on Stockscores, which is the risk manager or the risk calculator. So under charts here, see there's this tool called risk calculator. This helps us size our positions. So let's say you're buying a stock at $10 and you calculate that the stop loss should be at $9 and you don't want to lose more than $250 on a trade, and you pay $10 in commissions. You click on submit and it just tells you how many shares to buy. And that's not a hard calculation when the numbers are so rounded like 10 and 9, but it can get a little more complex when the numbers are 10, 20 and 970. All right. Now, once you've done a trade, you want to calculate your risk reward. So let's say you bought 240 shares of this stock. You bought it at $10. Oops. 240 shares. And we bought it at $10. And let's say we sold it at 14.80. And our stop loss price was at $9. And our commission was $10, and click submit. It's going to calculate for us what our risk reward ratio was. You can see here that particular trade earned a 4.8 to 1 risk reward ratio. For our risk tolerance, we made $1,142 at that level. Okay, so just again, a little more of the tools on Stockscores. Now, we have for our day traders, we have these indicators that I've created for TradeStation. Now, most of my students will use TradeStation. Not all will. Some might use programs like TradingView or their broker charts. There's lots of different charting packages out there. But I like to use TradeStation because I've created my indicators and they only work in TradeStation. And so you can either use Active Live or you can use TradeStation or you can use both. I use both. But when you're starting out, I encourage you to keep your costs down. And so just use your broker charts initially and maybe be on Active Live just because you're going to learn a lot by being on Active Live. As you get more experience, TradeStation, if you have to subscribe to it like I do, it's $79 US a month, but it pays for itself because you can just capture trades quicker and more of them by having the tool. I always like to say though, when you're starting out, just keep your costs down, you're learning. It's like, you're in university, you're living with 4 people in a half a duplex or something and keeping your costs down while you learn. Once you're out there ready to start making money, then you can start adding things like more sophisticated computer systems and more tools and things like that. But trading isn't about sophisticated systems and tools. Well, it partly is, but the primary thing it's about is having emotional control. And that's what I have to help you with. Because I can give you the tools, I can give you the knowledge, but you also got to learn how to follow the rules. All right, so the investor membership at Stockscores. So when you have an investor membership, you get access to all of those foundation lessons that I showed in the Stockscores Education Center. You get access to the investor strategies, and you get access to those market scans. And of course, you get email support from me. And email support doesn't expire. If you ask me a question in 4 years, I'm going to help you out. I don't even look at when you bought the course. In fact, I've had someone the other day ask me a question. He took one of my very first courses 25 years ago, and he had a question, and he's still a member this much longer. Much later. 6 months access to our tools. So when you register for the investor course, on the invoice, it'll say $300 a year for the access to the market scan. You don't have to pay that now. You get 6 months for free. And then after 6 months, it's $300 a year to maintain your membership to the market scan tool. The process for the investor: run a market scan, inspect the charts, find a chart you like, do the risk management and size your position, enter the position, monitor for an exit signal. When you get an exit signal, sell it. And then I always encourage people to journal their trades so they can learn from it. Now in the Active Trader membership, you get all of those things in the investor course. It's all included. Foundation lessons, investor strategies, but you also get the Active Trader strategies. You also get the Active Trader market scans. You still get email support from me. You get my real-time indicators for TradeStation. Now, this has got more value than I think most people realize. I have spent in programming costs well over $10,000 to create those indicators, but it's not even the cost of programming them, it's the time. I've spent, I don't know, 20 years developing my TradeStation code. So I don't give that out to anyone. You have to be an active trader membership. Every year people ask, oh, can I just buy your indicators? No, I just don't sell them without the active trader membership because I don't want a lot of people using them. So again, as I've said many times, I don't teach a lot of people. I'll teach 50 people now and 50 people in the spring, or in the fall rather. 100 people a year typically is what I do. And by doing that, we don't have a lot of people using the same tools, and I can give more personalized support to those who choose that path. The Active Trader membership makes you eligible for Active Live, which is a great place to learn, and also just a great tool to take some of the workload off of you when you're looking for day trades. So the process: pick your strategy. You're not going to do every strategy, so I do one or two. Typically, I'm doing early risers and IPDs. Is that the best? Well, it's the best for me right now. But some of you may focus on the Alpha Echo Swing strategy. Some of you may do the day trader strategy because you can only monitor the market for the opening hour. I'll help you pick your strategy. And then you're going to use Active Live or TradeStation to identify your entry signals. When you get one, you're going to inspect the charts. You're going to say no most of the time. If you look at 10, you might only like one. When you find one that is good, that meets our rules, you're going to do your risk management and position sizing, enter, monitor, exit, and then journal. Again, if you're on Active Live, at the end of every trading day, I go through all of the trades that are submitted to me by people. People usually typically are submitting the same trades because we're all, applying the same strategy. And it's a great learning opportunity. This is what the Active Live screen looks like. And again, we've gone over this already, but there's all these different boxes, and each box is for a different strategy. So you're going to tend to focus on one or two of these boxes. Now, one other option. For those that would like me to walk them through the learning process, there is something called the Mentorship. Now, this is limited to 15 students, and it is available, I think it's up now. So I put it live just before we started. And so you can register for this. It's the same strategies, the same theory, and all those sorts of things, but I'm just going to teach it to you personally over 12 classes. Each class is about an hour. Every class is recorded. I've had a few people already ask, like they couldn't attend one on Tuesday, April 22nd. Is that going to be a problem? It's not a problem. You just watch the video, and then if you have any questions, you just email me your questions instead of asking them live during the class. So it's not a big deal. You get a free month of Active Live with the mentorship as well. And I think it's really more for the active trader. If you want to make a career, part-time, full-time, out of trading, this is going to be the quickest way to get you there, because I'm going to teach it to you one step at a time. There's no procrastination. You've got class on Tuesday. You're going to, learn it on Tuesday. If you miss the class, you're going to watch the video on Wednesday so you can be ready for the next class on Thursday. Here is the schedule. Now, this is, every once in a while I have to change the schedule one date, but for now, this is pretty much the schedule. And so we start off with basics on the first session, which is Tuesday, April 15th. And then we go into advanced analysis. Then I teach you how to set up TradeStation, use Stockscores. Then we get into the day trading strategies for 2 classes, and then we practice them based on signals that happen in that recent week for another class. We actually do 2 classes on executing and practicing those signals. And then you can see the schedule there. So you can see it's mostly focused on day and swing trading. I do cover investing as well in one of those classes, probably session 10. We'll do some of the swing or position trading, but it's important to understand that if I do something as a day trade setup, it's the same analysis that you would do for a position trade. In other words, if you can see the pattern on a 1-minute chart, you can see the pattern on a weekly chart. So it's all the same technique. It's just about applying what we have for chart pattern recognition. And sometimes we apply that to a 1-minute chart. Sometimes we apply that to a 13-minute chart, a daily chart, weekly chart, doesn't matter. Okay, we're almost done. So let's talk about the value. The courses are $3,500, $2,500 with the discount you can get. Where do you get the value? Well, I will tell you, it'll save you years in learning time, and the losses while you learn. You will lose far more trying to figure it out yourself. And I can say that from experience because I taught myself. It took me 8 years to figure out how to trade. And in that process, I lost quite a bit. In fact, my uncle gave me $30,000 to help me get started. No, 20,000. And I lost it all. And then I ended up making it back as I learned. I gave it back to him 3 years later. And ultimately then was able to become successful at it. That market scan tool, if you were to go out and build that tool, it would cost hundreds of thousands of dollars. And so, some people always ask, well, why do you teach this stuff if you're a trader? Well, when I started with my Stockscores website 25, 26 years ago, I didn't have a lot of money back then. And so I created a business to help support the creation of this tool. Well, I can't just stop that one day because I've got customers and students that have taken my courses 5 years ago, 10 years ago, 20 years ago. And, I owe it to them to keep these tools up. So in order to keep the tool up, I have to teach a few people a year, and I have to take in $300 a year in membership fees so that we can cover the cost of the data. That's what keeps these tools going. And that's important to me because I use these tools as well. And, we're always working to improve the tools. We're always working to make our strategies better. And by having a small number of people that I teach every year, it covers the costs. It's a nice business for me that gives me some stability for my trading. If I don't want to trade every single day because my back is sore from sitting too much in my chair, I can take a week off. So it allows me that flexibility as well. The proprietary indicators for TradeStation, thousands of dollars in programming and years to create those. And then, of course, my time to support you through the process is valuable as well. So to me, the cost is nothing compared to what it would cost you to emulate these things yourself. Now, we have live training, as I've said, starting in April 7th and April 8th. I will do theory on Monday and Tuesday, and then we will do our market scanning Wednesday, Thursday, Friday. And again, for those that take the Active Trader course, we will have the free month that you can apply anytime. So, but it's always on a calendar month. You don't really want to join in the middle of the month because, Active Live for April starts actually Friday, March 31st and goes until, Monday, March 31st. Monday, April, what's the month? May. Yeah, March 31st, Monday, March 31st, and goes until Friday, May 2nd. And this Active Trader month is actually 5 weeks long. All of the classes are recorded. We don't record the Active Live sessions, but you're welcome to record them on your side. There's software out there like OBS Flashback and Camtasia. If you install that on your computer, you can record it if you want. Most of the action is in the first part of the day and the last part of the day, so those would be times you might want to record. Now, the special offer, if you register before Friday, April 4th at 11 p.m., you can get the class series included, free of charge, and you'll also get a free month of Active Live. If you do the mentorship, you get another free month of Active Live. There's the costs, $29.95 for the investor, $39.95 for Active Trader, but using these discount codes before April 4th will give you a $500 discount. If you do the mentorship, the first thing you do is you buy the Active Trader course, which is $34.95. Once you're registered in that, the system will then let you upgrade to the mentorship for $2,000. If you've already taken the Active Trader course 2 years ago and you want to do the mentorship now, you just pay the $2,000. To register for that, you just go to stockscores.com, go to the trader training area, learn how to trade, and scroll down the page, Active Trader. You buy it by clicking on that. It'll walk you through the process. You enter your discount code in at checkout. If you want to do the investor course, right there. If you want to upgrade, so let's say you did you've already done the Active Trader course and you want to now do the mentorship course, you go to upcoming events and you scroll down to Active Trader mentorship. You have to be logged in because it has to recognize you as an Active Trader student, and then you can register right there. Again, this is limited to 15 people, and I've just opened it up today, so it's now possible to register for that. If you took the investor course 3 years ago and you want to do the active trader course, you go to this page, go to the education center. And if you come down to active trader, you can see it for me, it says purchased. But if you haven't purchased that, it'll say you can upgrade there for $1,250. And you just click on that and it'll allow you to do the upgrade. There is no discount on the upgrade, unfortunately. So it's $1,250. You can't apply the $500 discount for the upgrade. All right, I'm going to do a poll quickly. Talked about this through the week. If you want to get an email tomorrow with just a little bit more information, it's really not a whole lot more, but it'll have the discount codes in there as well for those that don't have it. Now, if you've already answered this poll, you don't need to answer it again. But if you would like that email tomorrow, then just say yes. Let me know which you're more interested in, and I will send that out to you. We'll leave that up for 30 seconds, and then I'm just going to walk you through a few more slides, and then we can take some questions. In fact, while this is up here, I'll just answer this. How long do you expect to keep your business going into the future? Well, I love trading, so unless I get hit by a bus, but even if I get hit by a bus, the system still runs. There's computer people that keep the system up. So I suppose one day I'll stop, but I can't. I love the market. I don't know why I would ever stop trading. Like I do it when I go on holidays. Just looking for questions here. How long does it take to get access after I pay? Like within 20 minutes usually. Does TradeStation have a good keystroke system? Yeah, well, it depends. Like I use, Alt keys, so Alt Edit F, Alt F. You can do all that stuff like you would do with any Windows program. How old am I? How old do I look? 54. I started trading when I was 19. Someone says 35. Great answer, Chris. Thank you. What computer system and/or phone is best to use for trading? If you're using TradeStation, Windows works best. If you're on a Mac, you can still run TradeStation, but you have to run it through an emulator like Parallels. So it's better to be on Windows because it's only a Windows-based program. Do I need TradeStation or can I use Thinkorswim? You can use Thinkorswim, but you can't use my indicators in Thinkorswim. So I have lots of my students that use Thinkorswim. Do you set stop losses as the stock reaches new risk-reward levels? Yep. Yeah, always moving that up. Okay, so let me just, got a couple more slides to go and then we can wrap up. So why would you want to learn from me? Mistakes cost you time and money. Like I said, it took me 8 years to figure this out and I lost money along the way. And I just have the experience. I've made every mistake. I'm an expert on mistakes and I can overcome the hurdles. I've also taught, a lot of people over the years. Everyone has the same hurdles that they face. Not everyone has all of them. Most people have fear of missing out, afraid of taking losses. Some people just don't want to do the work. Well, you got to do the work. It's like anything else. If you want to get fit, you got to exercise. If you want to become a good trader, you got to practice and do it. That's the catch. I don't teach a lot of people, so I'm the only one that you will talk to in terms of training stuff. As I said, I have technical people that keep my websites up, but you will never talk to them. 25 years of teaching. I've helped a lot of people achieve their goals. During next week, I'll probably send out an email with a bunch of testimonials, but I have students from my very first class who are still using my tools, still attending active live. So it gives me a lot of pride to say that people are still happy with what they learned 25 years ago. The cost of learning how to trade is much lower than other careers. My daughter got accepted into NYU for acting, and we were told it was going to be $100,000 a year because she's a foreign student, and that's $400,000 for a degree. And at the end of that, she's either going to be an actress or she's going to be a waitress. So we opted not to do that. But if learning how to trade, if it's $3,000, $5,000, it's so minor compared to what most careers cost. And ultimately, the great thing that I love about trading is the freedom it offers. I started trading a long time ago. I work out of my house. I took a year off a number of years ago, 8 years ago now, where I moved to Hawaii, lived on the beach in Maui, and then I lived in Whistler where I mountain biked and skied. You can do all those things when you trade because as long as you have an internet connection and a computer, you can trade anywhere. I like to travel a lot. I've done trades from the Vatican, believe it or not. Well, not in the Vatican, just outside St. Peter's, but I was sitting on a bench and I executed a trade there. So that's just sort of a little funny anecdote about the fact that you can trade anywhere, especially with technology nowadays. We have our phones, we can execute trades through our phones, through an iPad, anywhere in the world, as long as you have an internet connection. I want to make trading easy and prosperous for you. Ultimately, at the end of the day, no one cares more about your money than you. And so you have to take charge, and I will help you get there, but you have to put in the work. I know a lot about trading. There's very few questions I can't answer because I've done this for so long. And I just think if you learn from me, you're going to learn how to do it quicker, better. And, my support, I think, is priceless. So that is my little spiel. So again, the registration process, go to stockscores.com. You have to first create a membership account, which is free, and then go to the trader training, learn how to trade, and then you just walk through the steps there. You can put in those discount codes. If you want the discount, if you want the free live training, which starts Monday, April 7th, you have to be registered by Friday, April 4th at 11 p.m. We always have people that leave it to the last minute. It's not to leave it to the last minute. You can register today, tomorrow, any day this week. I will send out an email tomorrow just to summarize some of the things, but for the most part, we've covered everything today. And you might get a couple more emails with some testimonials and things like that from some of my past students. I've got lots of happy students over the years. And then we'll participate in the live classes April 7th. And if you choose to do the mentorship route, that'll start Tuesday, April 15th. And then the following Tuesday is our second class. And that is about all. So let's just see if there's any. If you want to do the mentorship, it's just one extra step. So you have to register for Active Trader. Once you're registered, you have to log out and in again, and then you can register for the mentorship, because the system won't let you register for the mentorship until you are an Active Trader level student. So someone's saying, I still can't get in the education center. Can you look into that, please? Scott, if you wouldn't just mind emailing me, because when I close this webinar down, all of these questions get lost. So it would just be helpful if you can email me and I'll look into that for you. How long will we have access to course materials? There's no limit. The market scan tool you get free for 6 months, but there's no limit to the education. I have students from 15 years ago that are coming back today, and they can still log in and use the education. Where are the codes? That was on the screen. I think I've got them. Maybe I've got them here again. Let's just see if yeah. So the codes are, if you missed writing them down, it's 500 ATA. I've got them. Let's just go back to it. There they are. So here's the discount codes. Now, someone asking what the prices are in US dollars. So your US dollar is about 1.4 times the Canadian dollar. So if the course is $3,500, it's like, what is that, $2,400 US? You can whip out a calculator and figure it out. But we charge in Canadian dollars. But your credit card statement will show the equivalent in US dollars. Is there a more tax efficient way to trade, for example, as an individual through a numbered company? I trade through a corporation because corporate tax rates are lower. I'm not going to give you tax advice here because every person's situation is different. But yeah, there is certainly some incentive. If you're going to be a professional trader, you should register for that. Oh, also, if for those of you that took the course anytime in the last 25 years, if you want to repeat that week of classes, you can do so. It's $195. So if you bought the course in the last few months, you get that for free. But if you took it 5 years ago and you want to retake it, you just go to the upcoming events and you can register there. Where is it? Oh, maybe I don't have it up yet. I'll put it up later today. And you can register for that for $195 Canadian. Will we learn the logic behind the scans? Yep. Yeah, you learn the theory behind it. That's part of what's in the theory. I don't give out the code, obviously, but the stuff is there. Okay, I probably missed some questions, but I think I'm going to just sort of leave it at that. If you have any other questions, let me show you my email address. And you can email me. There it is right there, tylerb@stockscores.com. Make sure you're subscribed to the Stockscores YouTube channel. I'm putting up free videos every week, and I think that's a good thing to do. I'm on Twitter, but I rarely put anything on Twitter. So YouTube primarily is the place to watch. And I will leave it at that. Oh, one last question. What pointer drawing tool do you use? It's called, what is it called? Zoom It. Zoomit. Just Zoom It, or Google Zoom It. It's a free download from Microsoft. So, all right. Well, I want to thank you all for attending today and hope you've enjoyed this. I know it's gone a little bit long, but hopefully you answered all your questions and gave you a good tour of what we do. So we'll end that webinar now, and I'll see you all next week. Have a great rest of the weekend. Bye for now.